Now, after 30 years, Japan finally got the thing that it had been looking for, which was sustained inflation with rising wages. So the emergency was over, and the Bank of Japan ended its emergency programs. So in March 2024, the Bank of Japan ended its yield curve control and began a hiking cycle where they started to raise interest rates. And when they first did this, markets didn't like this at all, and part of that had to do with the Japanese yen carry trade. When the Bank of Japan kept rates at zero and even negative, a bunch of people went out and borrowed Japanese yen to go out and invest in assets that had higher yields. So you borrow money at low interest rates and invest it at a higher rate and profit on the spread, or what is called the carry. Well, when the rate on the Japanese yen goes up because the Bank of Japan is hiking rates, then the amount that borrowers pay on that borrowed yen goes up, and therefore the spread that they are earning on that trade will shrink. And this forces investors to close out some of their positions, for instance, by selling stocks so that they can pay down the loans. And this is why the Bank of Japan hiking rates can have an impact on all of global markets. The Japanese yen has been borrowed to buy all kinds of risk assets all over the world. But now Japan is on the other side of the deflation problem and is worried about potential runaway inflation. So it would much rather hike its interest rates now and faster so that it can prevent long term inflation expectations from getting too far out of hand.